Hey everyone, mind my voice. I'm a little bit on the weather, but this is your Precision Markets office hours with your Precision Markets coaches, Nathan, Marco, and Brian. We host these calls every Tuesday and Thursday at 12 o'clock Pacific Standard Time. That's GMT -7 time zone wise. If this is your first time joining the call, our format's pretty simple. We allow you to ask questions, be able to share charts, any kind of thing else that you can be able to do to be able to see any kind of answers to the questions that you may have in Discord with a little bit more a little bit more description, a little bit more interaction. So feel free to ask your questions within the chat, or feel free to come off mute, and we'll answer them in the order that we receive, and we'll go ahead and begin. Yeah, I took. I guess I'll show you the trades that I took. Let me find my what's it called first. On my laptop, so I need to find where's trading view. I don't have nothing.
Also, you told me today in the chat that you need to see like on the daily if the market is trending or not. I mean, the market usually trends on a daily. Can you show a scenario where it's not trending, or how on the daily? Because what I've been seeing lately since I've been turned on to the daily, like it's been trending. Like GU didn't look like it was trending today, but then it ended up like it did like 200 pips.
Yeah, that was all news related. That's why I did all that. It wasn't doing that before.
No,
so,
it wasn't.
So I'll give you an example, right? Like, look at the market. Here comes AUD USD, right? Mm-hmm. The market made a lower low here, right? But it's not really trending. It's moving sideways.
Yeah.
The reason why is because you got 1 point here, second point here. It touches within the same area. It comes in here. All of this is just nothing but consolidation. So if I'm looking at that, I don't really have a bias that it's going to go up or down. I really have a bias that's more like you're going to move sideways, and I'm looking for it to break. Now, you can look at this and say, oh, it broke with one candle. Well, what did it do after that? It went from this high to this low, to this high to this low, to this high to this low, to this high. That's not a trending move. All that is consolidation. None of this looks to be high probability for taking the setup. And I wouldn't even go look at this and look at what's it called for you to be able. I wouldn't even be looking at POIs at this point, because there's nothing there that's really all that give me confidence. Let me go look over here. So this move here, you see the market's trending. I know about UJ. I know what it's doing. It got to 150. It spikes down, right? Even with this, though, that's really a consolidating move, because what I really want to see is it make some movement all the way down to here. I want to see it come really into it. So if it's making consecutive candles, that would be great. Hop over to EU. Well, what is EU doing? Let me keep these. Second. Right. So if you come over to EU, what is it doing, right? Here was the last lower high that it made. So if we're expecting the market to come down and made a lower low, it would come up here and more likely take out this low, right? Well, this high is weak because it failed to take out the low. This low right now is weak, but my real expectation is that it comes up and it comes into here. But right now, at the current standpoint, this thing is really just, it's made, if it rejects tomorrow and gives me a bearish candle, then we have another consolidation right here. That's not really a trending market. So you can either play the highs and play lows, or you really just wait for it to break out. But right now, it's not a lot of things that's really trending in the market. It comes to NASDAQ. Expectation. What did I do? I'm trying to figure out where I was drawing this from. Expectation was that it would take out this high, even though it tapped into this supply. The reason why I say that is because the high made a push down to make this low. It came back in here. It tapped. This tap failed, so I was expecting for it to break through. I always wait to see if I see something that looks like consolidation, there's a difference in consolidation and where it kind of breaks. This one was a break because this tap failed to take out this low. So I'm waiting for the body close above this. As long as it doesn't wick and then reject, then that's not consolidation. So this one continued on. We got the move we're looking for. So now going into tomorrow, I'm still expecting for this continue upward. This is more of a trending move, whereas all of this right here was nothing but mostly just a bunch of consolidation. Does that make sense to answer your question?
That makes sense, man. I could have had 13R on Nas today, but I just took my profit.
No, you see something like this, it was consolidating most of the morning, and then it finally took off. Even if it was going to inside of this supply zone head downward, what you would have seen is that it would have done something like this and then broke down, and then you would have known, oh, okay, when it pulls back, I know to take this trade downward off of something like this. You would have known to take some type of trade like that. But part of your confidence that you'll get of knowing how to hold trades is just knowing how to know the overall direction. When you come to the daily and you see that it's struggling here at this daily supply zone, but you know that it failed to take out this low. So at a minimum, it's going to take out this high. You come down to the 1 hour, and with the 1 hour time frame, you're not really seeing a chop. So right now, buyers are still at play.
Mm-hmm.
You pick whatever POI that you want to. I mean, 15-minute would have gave you good POI. This was the most choppy price action ever. But pretty much you had, well, let me zoom out a little bit. Hold on a second. I can't see my times. You wake up right here. There you go. You wake up right here. Instantly, I'm moving back some. You have this low was taken, which means this high. This is a supply zone right here. The supply zone was broken by demand, and so when price came back at a minimum, you know that, for instance, this high would probably be taken. So if you're looking for M15 short target, if you go to H1, you look left. If this is going to hold, more than likely, it's going to take out something over here. So you could have had this as the target. Oh, wrong button. You could have had this as a target. You could have had this as a target, or even the top of the supply zone, you could have had as a target from a daily standpoint. Because once you have direction right, it's all going to work out. Can you see my screen?
Yeah, I was frozen a little bit.
Oh, okay. Yeah, at least you could even have this. All of these would have been valuable targets. That's going to be your first target. If you show momentum, it breaks here, continue holding. If it comes and breaks this, continue holding. If it breaks this, continue holding. It slowed down right in between the H1 target and the daily. You see that?
Mm-hmm.
So that's something you could use to help you to be able to know when to take it. But more likely, you could still continue to hold the trade right now because it's going to break this daily supply. It looks like the price wants to go up based upon what you can see from a microstructure standpoint. But does that make sense?
Yes. So you said GU was news today. Why did that? What news made it do?
The whole market moved based upon news today. If you notice, the market, it wasn't just NASDAQ. Look at how this has been consolidating since yesterday during the Monday, during the close. The same thing happened here, happened on US 30. The same thing happened on pretty much gold, and then it dropped and finally moved upward. So all these pairs were consolidating you had what's it called? You had consumer confidence coming out today as well too. So that was a big kind of telltale sign. They got the jump on some stuff earlier. I don't know what else basically kind of came out today, but you don't like you go from this consolidating condition to like a nice trend. There's definitely something that was involved that caused that because it's not a coincidence that multiple pairs were moving like that all kind of moved that way. So does that make sense?
Yes, sir.
Consumer confidence was important because right now, if consumers stop spending, the economy goes to kaput. Does that make sense, Perry? Like, but some of these things are now taking more precedence than others. Before we wouldn't even worry about consumer confidence, right? Soon there's going to be a time where interest rate increases aren't going to be a thing because there's not going to be an interest rate increase, so the market's not going to like jump and move. But if you're looking at these conditions and saying, okay, clearly they manufacturing data yesterday did the same thing when you look at the market. Um, where was it? It was Monday. So the market comes in. We had here was let me turn on the sessions. That'll help easy, make it easy. Oh, okay. All right. Everything in light blue is the Asian session. Everything in purple is London. Everything in the red is New York. You come into the Asian session, consolidation. You come into London session yesterday, consolidation. We get the news by ISM manufacturing for the United States. It jumps a little bit, but all of this mostly never moved until today. We get this large jump, definitely news related spike. Same thing kind of happened here with NASDAQ, right? So we get this consolidation, small move downward. London slowly begins to move up a little bit, but all of this, you got this high being tapped wick, this low being tapped wick. All of this really made a move that made something like this. Uh, and then we slowly get a move upward. We go back into consolidation. All these time periods is where they wait on some type of fundamental data that's going to help them to be able to determine where the movement should move next. So we got also the jolts of things that can happen. You got Japan and the intervention that it's doing, but also they come out and say, all right, we're working with the other G20 governments, especially the United States. Okay, that's more favorable news to knock down the DXY, which affects dollar. There's also what's it called? You also got the war. So any shocks, any war shocks, like for instance, Russia saying today that they're going to start doing nuclear exercises. All that causes any kind of shocks in the market. So you'll get things like right now during this time, you have to be mindful of the things that you know, and then also things that you don't know that could cause any kind of jolt to the market. So last week, multiple times, we ended up getting major jumps during the Asian session. I'm trying to figure out where was it. We get like jumps like this during the Asian session, but there was no like really news that was really being able to be found. But on these days, that's what you could tell was make for instance a harder day, a much more consolidation. So uh, you definitely have to recognize, like I said, the market conditions just about okay, here we're clearly in consolidation. We're probably going to get a breakout move in one direction. There may be a catalyst that we know of or catalyst that we don't know. So I want to make sure I thoroughly explain that because you can get lost with that kind of detail. Does that make sense?
Got it.
Cool. Uh, Joko asks, can we go through market structure pairing with H1? Joko, do you mind kind of further explain that? Because I want to make sure I understand what exactly you're asking because I'm a little confused exactly what you want what to see. I feel so much better when I'm not coughing, sound like a werewolf every 5 seconds.
Hey Brian. So today on my trade, I mean, sometimes I can't believe, like, is it really that easy? Like, I just did the daily, the 1 hour, and I just put my 15-minute POI and it just went.
Man, it's once you really get in and hold on to market structure, you'll find that if you get the direction right, which is 50% of the battle, the other part is just the timing and figuring out where to enter. If you do that part correctly, you'll find great trades, and you'll be able to hold trades for longer periods of time. I mean, and then once you understand, other things with market structure, you'll know, oh, well, if it's going to continue trending in this same direction, it's going to have to take out this high to continue the structure. And if it's going to take out, for instance, from a 1 hour structure time, that means it'll come out and take out this high, or maybe this high. And then if it's going to continue from a daily and take out the supply, then we know it's going to take out this high. And look at it. It ended up doing that. Well, it ended up stopping just short of, but you could have taken your profit all the way down here. So, but yeah, man, it's like each one of us, coach wise, we focus on our own things. Like I really like the way Nathan does cost for pullbacks and first levels of respect. It really helps be able to. He helps me be able to know. All right, these are the levels that are hold. These are the ones that won't. It helps you be able to really know what trades to be able to take. So, like I always have intermediate targets. Like my first point, I always look and say, all right, first M15 high. If this doesn't go, then I know to close my trade early. If it goes, great. I get to here and it doesn't take out this high, then I know to close. If it takes it out, great. You just keep on going. But the three things you really want when it comes to trading, you got to know what direction the market's going. You have to know the timing of where you should enter, and you have to have a clear signal and say, when I see this, I just enter. And if you have all three, man, you can make a great system. So, uh,
So
trading
so
is
so how will you know, like, your target, the TPM 15 and so on? So what is the signal you would know, like, to get out? Like, how long will the market have to consolidate for you to get out?
you'll just kind of know. There's nothing in the market that's random. So, um, I mean, it's really just kind of reading the structure. I read market structure, and that tells me everything I want to know. So if I'm taking a trade down here, I take a trade down here. It comes up to the spot that I've already identified, but it's still breaking. It's not moving. Here's where it's consolidating. Okay. But then also I know this is the market open. So I'm not going to close my trade at market open because I know market open is going to give it a jump. It jumps, it breaks through. Okay. It also broke through the second one. Okay, cool. All of this is nothing more than just a pullback. It goes and it breaks here. Okay, great. Here's another pullback. Okay, great. Whereas with this I might be more willing to close because this is nothing but sideways movement. The reason why I say this is because here's the high, and then here's the low. All I did was read the market structure. All of this is internal structure, right? Because we haven't passed this low, we haven't passed this high. At this point, you know to close because you're at a significant H1 M15 high, and you're also moving sideways on a lower time frame. That's not screaming anything that it's making moves continue upward. So makes sense.
Yep.
So It's just everything. Everything I do is about market structure. Market structure really will tell you what you want to know. You just gotta learn how to read it. Like when the market moves sideways like this, that's not really a good sign. It's not moving with no momentum. When your trade was trending, it was moving upward. It was constantly moving upward. It made a pullback. Okay, no problem. But it already had broken through your point anyways. It pulls back and then it shoots up a little bit more after it gets more news or whatever it took. Then you get to here, I guess they had mixed reaction regarding whatever news happened. And then it slowly kind of continued out through the day. And now the market is slowly run out of steam because you got to remember the timing. Right here is when, right about here is when the kill zone ends. We see it make moves backwards, but none of this is stuff you really want to be trying to get anyway. So,
Do you manage your trade on the 1 minute once you enter?
No, I manage on whatever time frame I'm on that I took the trade on.
Wow. So if you take a trade on a 15-second, you manage it the whole way on a 15-second?
Mostly. I mean, I'm not gonna say it really. Oh, sweet! It finally broke the high. Okay, supply should be gone today, hopefully. But I mean, it's not really about what time frame you use to manage it, right? I look at it on the 15-second, but I'm really paying attention to what point did it hit. When I take the trade, once I've got my trade to break even, I'm not really paying attention to the time frame. But when it gets to some of these highs and lows that I'm paying attention to, I go back to the time frame I took the trade on. I just look and say, all right, is it trending? Is it consolidating? If it's consolidating, it's not as likely for my trade to continue on in the direction it's going. So I would have closed the trade probably here, right? That you would have taken just based upon what you could see, uh, right there going to the left. Did it continue on? Yes, because we know from a daily standpoint, more likely the supply zone was going to fail. So if you use that as a confluence, you could decide to even continue holding your trade. But just based upon kind of what you saw, um, I would say looking like this is go to, like I said, like always know these points that you have from like higher time frames, so that all right, you take the trade, boom, I come up here. Is it still trending? Yeah, it's still pushing upward, still pushing upward, still pushing upward. Market open, great. All right, cool. It closed above, it consolidated, it pulled back, but it's still making some type of trending structure. It's just going downward. Not not a problem because it broke a major high we expected it to break. So cool. It continues pushing upward. That's why we have to be patient. But this ain't the stuff that I'm looking for. And you see that it mostly moves sideways. So at this point, I would have closed based upon the trade that you had taken. But it's a combination between looking at the time frame I took the trade on, which for me I would take it on 15 seconds, and then looking at the M15 H1 target points that I think it'll touch, because it's always going to break a demand's goal, or not even demand's goal, but every low that you have, its goal is to take out a high, and every highest goal is to take out a low. And when it stops doing that, that's when you know, for instance, something is going on that you need to pay attention to. But the key is the combination of whatever your higher time frame targets are, combined with what price action do you see on lower time frame. Because lower time frames will teach you like early entry for whatever you're looking for, if that makes sense. Like you start to see the signal of the move that's going to happen, but it's always based on some higher time frame context, right? So it gets up to a high, takes a while to take, it consolidates. You could have used this as another POI, for instance, and said, okay, it broke this high right here. So when it comes back, what happens? You come down to the 1 minute. What do you see from a structure standpoint? Well, price makes a really, really strong move right here. It breaks. You could have used this all as an entry area. somewhere in here. Let's say, for instance, use this as your demand zone, put a limit order in to cover the end of that. Boom. Here would have been another a 7R trade. Now, remember, this would have been the high that you're paying attention to right here. You want this high to go because that was the highest point outside the supply zone. It breaks, it goes up to it first. It doesn't really touch it, but it makes a pullback. Still making trending structure, still going up. It goes and it breaks it, but this time it breaks it with a strong body candle. You know, all right, more likely this ain't gonna hold, so I can continue holding my trade. You go look at 15-minute. Well, I don't even go to 15-minute. I'm going to 1 hour at this point. So more likely, I would say somewhere over here. This might be my target. Somewhere close to this thing. So that would put it up to almost about 12R. And then boom. Does that make sense?
Yeah, got it. Thank you.
Awesome. Any other questions, guys? All right, guys. Well, I'm gonna stop sounding like a werewolf and let y'all get back.
Can Nathan go? You or Nathan go over your trade today?
Nathan, you want to go over your trade?
Sure. Nothing too special for me, to be honest. Same as yesterday. Yeah, I'll take a look. I'll bring it up. Okay, so basically, I kind of missed that big move, so I'll go to the 15 first. Can you guys see the screen? Okay, it's not too big, is it?
It's good.
Awesome. Well, I missed that big move from the bottom, which kind of sucked, to be honest. I didn't really find a way to get into it. There was a little bit of an idea of, after sweeping out basically this low, we didn't close with a candle body. So when I got this rejection down and it came back up on EU, I was thinking maybe there was a way I could get into this because it's swept liquidity, and it kind of fits my plan that if a 15M supplier demand zone gets taken out, I can try a counter order flow trade because order flow is bearish, right? So we took out that zone, wicked it on the 15M and popped straight back up. So I seen there was a little entry, I think it was in around here for it to go up, but I didn't enter it from there. And by the time I could actually come to terms of what was happening on the chart, I also missed another entry inside here. So we can see there's a little bit of a demand chain happening right here. And there's a few entry points which you could have entered on EU if you wanted to do the counter order flow trade. So unfortunately, I didn't take them. I wasn't 100% confident in it. But I managed to catch something small up here. Basically, I was looking for a continuation. And again, you know, price, you can see the leg is quite overextended. I know it was quite in premium, and to be honest, I actually got really, really lucky. So whenever order flow had changed right here, we got the change character, the break supply. We can see we got a reaction. We popped down, mitigated demand down here, created another demand zone, but price didn't come back. We've got that order flow shift to bullish, from bearish to bullish right there with the change character. So on the way up, I was looking for a continuation, but because it's so overextended, it's a little bit difficult to get in on these moves. But on the 1M, I understand it quite well, so I can play off the 1M itself. So the only entry that I seemed somewhat, I guess you could say, confident in was this here one here. I know there was an entry right here as well that I missed. I don't know if you guys see it with your eyes, the way you guys see the markets yourself, but we had a little bit of supply inside here. A reaction, again, we pushed down, we mitigated this demand. Again, we got a second reaction here, and demand again mitigated this. We had a nice chain here. So I was kind of looking at this area to trade from, this whole block. At the same time, I was thinking to myself, this is overextended. We are in premium. Maybe it's dangerous. I'm second guessing it. So I waited for some more confirmation. And again, we had supply, reaction, pop down again. We mitigated this area. So we're seeing that demand chain, as you can see, all the way up here. So demand is holding. So I kind of use this as a floor, a first level of respect. And then from here, I was able to say, okay, demand is holding. I want to get in. And I think it was from, yeah, it was from this area here. And you can see I was still hesitant taking it. I waited for still another break. So here again, we had supply, reaction, this pop down, sweep, mitigation of that. Again, demand is holding, broke supply. Price comes, ranges, pops down. Same thing again. We get a bit of supply inside here. So we see that push down, reaction, and we get that break. So straight away, I'm like, I'm going to trade from the chain. So I took it on this, executed it, got a nice fill. And the only target I could have at that moment was this high. And I'm quite glad that I took out this high, that I competed at this high, because it started to come straight back down. And I then tried shorting it ever so much. But unfortunately, after trying to short it right here, I added in a little scale in around this area here, but I had my stop loss right above this high, just in case it was going to pop up. So this one got taken out, and the scaling also got taken out. So I only totaled about 5 or out of those on top of the 7. But as you can see, look, it's as easy as seeing order flow change. Like, I'm not saying trade directly off the 1M, like we're supposed to use the 15M zones, or if you use liquidity, internal, external range liquidity. But in this sort of instance, it's totally fine for me to trade. It fits the plan. We've taken out external range liquidity. We didn't close above the high, and we could start to see bang, demand, fail. You can see I used the first level of respect here to make sure this supply would hold. And again, reaction, break. Use this zone to trade from. Same thing over and over and over again. Well, like I said, nothing special, just a continuation trade, and it just started consolidating right there. Like, so I don't know. EU has been tough enough to play. I found it quite difficult last week. There's only a few trades I managed to profit on. I took a good few losses. I think it was the first time I ever took, I think it was about three losses and I think 2 break evens in a row. So that was quite difficult last week, but I made up for it by the end of the week, which is great. But in general, like, PA is slightly tough on EU. So anyone who is trading EU, it's okay. I feel you, it's fine. But I think soon we're going to break out of the little rangy plays we've been having on the 4 hours. And I think we may see some higher prices soon, because we're not kind of pushing lower anymore. Order flow is kind of switching now to bullish. We're structurally, we're bearish, but just the order flow within structure, the internal stuff, is turning slightly bullish at the moment, which is kind of a good sign after we've seen all those bearish movements for the past few weeks. I don't know about gold and stuff. I see you got a good trade on gold today. I stopped following gold about 2 weeks ago, but I know, yeah, Marco, you were saying you got a good trade on gold. And there's one pair I was thinking of trading, but I'm just a little bit afraid in regards to the aggressiveness of gold. So if anyone has any input, wants to share any thoughts with me, even through the Discord, feel free to send me a message. I'm really thinking of going back, trading gold and following it again. I left GU at the table. I'm still with EU for the past year, and it pays the bills. But I want to switch to another pair, but I just cannot find one that I'm comfortable with. You know what I mean? But if anyone has any recommendations for a second pair for me, feel free to hit me up.
And Perry, see how this high that Nathan pointed out, more likely M15, that's going to be the top of some type of supply or something. And just look at, like you said, it targeted this high, but look at what it did. It just stopped and it started ranging right there. That's a sign that it's probably not going to continue forward. That's why he was smart to go ahead and close it, but also a great sign that it's probably going to push back anyways, because that's, if it, this basically on M15, this is probably one strong candle move. You get another strong candle move, it fails to take it out, so more likely it's going to at least go back to somewhere within that range. I bet you this is all this is just one candle, or maybe a range of 2 candles, like a sell candle and a buy candle on M15. So it, but he got the
sorry,
earliest.
Brian.
Oh, my bad. I was gonna say you got the earliest signs right here on M1. So
yeah, I know just something I want to say about, when I started trading a year ago, right? Just for anyone that's listening to this, even in the replays, but I started trading about a year ago, right? I was always trying to take my profits quick, right? I was always taking the 1 or the 2 or the 3 or the 4 or whatever the market gave me. I would jump and I would take that profit, right? And I started aiming for the 5 ors, just get the 5 ors in, don't take anything below 5 ors. And then I would start to get the 5s, and slowly, I built up the confidence to hold trades. And then I started targeting highs and lows. So 15M highs, 15M lows, 15M supply or demand zones, depending on the order flow, right? But I can tell you something, right? Last week, because I took like 3 losses and I had the 2 break evens, the 2 break evens that I took weren't trades that tagged me in and came back to break even instantly, right? There were trades where I decided, you know what, I'm not going to follow my plan of taking them at the highs or lows. I'm going to hold on for a little bit longer. Why? Because the week before that, some of the trades I took off at the highs and lows, they kind of went a lot more than the highs and lows. So last week I got the impression of, you know what, I might lock in a bit and I'll hold on a little bit longer. Why not get those extra, couple of hours? Why not? And it totally backfired on me last week when I stopped following my plan of taking it at the highs and lows. That's why they broke me even. And those were like 12-hour trades and they broke me even. I didn't even lock in profit. And I told myself I was going to lock in profit. It's funny how in the moment you can tell yourself things, but your plan that's in front of you, that's what you got to stick to, not what you come up with in your head or what you presume to be areas that you should take. You should have that plan of where you're going to take it and you stick to it. And today that paid off, going back to the bucks, going back to the plan of the 15M higher low, because look at that. That would have destroyed me like it did last week twice and broke me even. So always have a plan of where you're going to go out. So if this is the sort of thing where it's like you're starting to see price slow down and you're starting to see demand break maybe on the 1M, that could be your signal to go to take it out. Or else you're targeting specific highs, lows, supply or demand zones. You have to have some sort of management there, because if you don't have the management there, it doesn't matter how many wins you get, you can end up taking way too many losses and not making a profitable week or month.
Man, that's
real spill right there. So
did you ever hear that saying? What is it? Always, you can't go. What is it? You can't go broke taking profits. Did you ever hear that one before? That's bullshit. That's absolute bullshit, because you could be taking profits, right, of 1 or 2 ors, and you're getting 5 or 6 losses. You're gonna be in minus. So whoever came up with that one, I don't know.
So your plan is to take out the highs and the lows.
Exactly. Yeah. If it's a pro trend, if it's a pro order flow move, so let's say demand is in control on the 15M, I will go for the highs and lows. But if it's a counter order flow trade, then I'm going to just go for the next supply or demand.
Exactly. And then you didn't stick by your plan last week and it ate you up.
Exactly, because I wanted to hold on just a little bit longer than the higher, just a little bit longer, because the week before that they were kind of going a little bit more than the highs and lows, and I kind of had it in my mind that, you know what, maybe I can pull out an extra 2, 3, 4 or this, last week, and it just backfired. And I'm a person that doesn't mind to hold the trades. Like, I will hold them to the target, and if they come back and hit me break even, like, they can do that to me, I'll hold to that target. But the thing is, it's a little bit of greediness, and that's what happens. It's part of psychology and it's part of the whole trading business. But for me, the highs and lows are the perfect thing to target. But like I was just saying, just about having that management plan that you consistently do over time, because if you're consistent within something and you're getting results on a monthly basis or whatever way you track your trading, you have to be consistent with that,
Yep.
Nice.
Sorry for elaborating on.
Appreciate you, man.
No, that's the realest thing spoke, guys. Nathan, you hit it on the head. You got to have some type of management plan, because if not, you. All right, go back to your chart real quick, Nathan. I want to share something real quick. Show something real quick. Um, that's why I was mentioning Perry. Like, I had multiple targets, right? But at every spot, I'm just looking to see what kind of reaction you get there. So this was the high that y'all can't see the annotation. This was the high that he showed. Look at how. Oh,
Sorry, my bad. I was just opening.
no word, brother. This is the high. Look at how it rejects. It rejects with a whole candle body. He was smart to take his profits there. Then he ended up taking a sell, right? Remember what I said? I said more than likely where it stopped, there was a candle. This was the low that it was trying to take out. This high failed to take out this low. It stops here. He was smart to take out his profits on those sell trades right there. But everything that happens in price action, none of this is magical. There's nothing magical about it. You just have to make a system, like Nathan mentioned, that you follow to the T every time. Do not deviate from it. So you check the reaction at the first time. It doesn't take it out. If he wanted to take a sell trade, what he wanted to see was that this low was going to be taken out by this sell. It wasn't. So he closed the trade. Don't get caught in yourself hoping when price does something like this and pulls back, you're like, well, it should go down. When you're looking at the price action, you see in this area, oh, it's consolidating or it reject with a strong wick. That's a sign it's not about to go. Like,
Yeah.
Mm-hmm.
Yeah. That's my main thing. Like, just holding the trades, and I guess I have to put in my mind, I have to target, take out the highs and the lows. It's the psychology part, because I'm getting this demand and supply down. I'm getting better at that. But it's about holding those trades.
yeah, well, just like Nathan said, always have a target in mind. Like, at first, if it's 5R, it's 5R. If it's M15 highs and lows, M55 and lows. I always have about 4 targets in mind every time I take a trade. The first one is the first high or low it has to take. And if it doesn't take that, I'm closing the trade. And that's the first thing on the entry time frame. Then I move and say, all right, if it can take out that, I'm gonna look at the next M15 high or low. If it takes out that with me showing no signs of consolidation, I keep on holding. And then I target the H1. If it takes out the H1 with no problem, great. I keep on holding. Then I go for a daily target. But every part of that is systematized. It's nothing is based upon my emotions or feeling, oh, maybe I can get some extra R's today. You know, everything.
I'll be like that.
So you know how sometimes, like, what if like, okay, it passed that M15 target, it passed that 5-minute target, and then just in between the 15 and the 1 hour target, it just starts like doing a change of character, but then like prices just shoot up out of nowhere. Like, what do you have to say about that?
Well, if it doesn't change the character, that's fine. What you really want to see is consolidation, because price doesn't move in a straight line. It has to pull back. It goes up and it pulls back, and it goes up and pulls back. When it starts doing something like this, oh, that's a hell no. Because you're in between this and this. More likely, you might do something like this and start doing like that. Because when you start seeing consolidation, for me, when I see consolidation like this to me is what I consider liquidity. You're getting people to buy, you're getting people to sell, but you're not moving out of this range. And so,
one thing is, if demand is in control, like in that situation, then, you know, or you could say, yeah, well, look, if supply is, well, if demand is in control, why is it constantly giving a reaction, right? Like that, when it's constantly bouncing and bouncing and bouncing, it's just, like you said, Brian, generating liquidity to manipulate people. Why is it not just going?
Right. Because like I said, over here, it was clear demand was in control, because every time price was taking out a high, price was creating new highs. So every low was being protected because it was taking out the highs, and all the highs were weak. But when you get to here, you're like, it's not going anywhere. Demand isn't really showing its strength. That's when you know, okay. But when, let's say, for instance, you're in a trade and price does something like this. Well, demand was in control. Supply had a pseudo control over here for just a little bit, and then demand re-entered right back in. So would I close exactly here? No, I wouldn't, because maybe I was looking at this demand zone, but the reaction that really came from was this one. That's not, to me, liquidity. That's just maybe some people took profits off at this high and supply had enough orders to control. But as soon as it got back in, demand said, this is the price I want. It takes off. So there's a difference between what I'm getting at is pullbacks and consolidation or liquidity building. And you just read, you just learn over time to read, what is it? What are we getting? Are we getting a pullback or are we getting consolidation? But you just got to make clear rules, right? So for me, if I get price goes up and it shows a wick here, right? I look at the wick down here. If price comes down here and I see another wick without a body close, all right, now I might be close to consolidation. If price comes up here and it wicks above, but it doesn't break, I've made 2 points on the high. I've made 2 points on the low. At this point, I have true consolidation according to my rules. Now this has caught my attention. But even whenever we get to this point, I'm on watch, because we wicked here. And let's say, for instance, a bullish candle happens right here and another bullish candle happens right here. Okay, this was the low point. This was the high point. We failed to take out this low. Now at this point, I'm really keen to see what happens when we get here. Price goes up. Let's say it wicks above and it makes a bearish candle, another bearish candle. Okay, clearly we're in consolidation. So now it might probably do something like this, because we have to know that the market uses consolidation, like Nathan said, to confuse people, get a whole bunch of orders, and then it sends price in another direction. We just have to be patient to see what direction it goes. But if you're in a trade and it comes up, especially like right here, you got a supply right here, it fails to take out this high, fails to take out this low. All of this is a bunch of consolidation for it to either go one way. Maybe tonight goes like this, or maybe tonight it comes back and does this. So does that make sense, Barry?
Perfect. Everything did. Thank you.
Nathan, I'm like you, man. Today I decided I need to get another I need to get a non-USD pair, because I'm fighting consolidation. I'm doing okay. I'm making profits, but at the same time, I'm tired of dealing with this consolidation.
Yeah.
GJ.
Man, I wish I could touch anything with yen, but with the way the Bank of Japan is set up.
Yo, did you guys see that video on Instagram of what they were doing when they were like selling off the market?
I missed that.
There was like a video of them they were in the office, like in the actual broker, and they're like counting down the seconds, and then they just whack sell, and they have it on the big screen, and they're all looking at it, friggin' melts. Man, I think that's what you were talking about last week or something, right? You were talking about the news that came in, and it was a big sell-off or a big something you were talking about, right? In regards to that.
Like the Bank of Japan, they're trying to defend the rates. They want to defend the price, the value of the yen, because their interest rates, they haven't raised the interest rates like the rest of the world, but their inflation is only at 2%. But when you look at a chart from January, basically, of 2021, like all it's been is a constant move upward. But what's happening is it's hurting their exports, which means families aren't making as much money, and they're being hurt because they do a lot of exporting to the United States, and the yen's just not being valued. So like their sales are going down. So every time they mess around, and they'll decide to just send the market down. And what they have over $1 trillion in reserves. And they're like, this move here, they spent $30 billion to send the market down. And then they had another move. Here was another move they made last week. They send the market down like this. And they're not commenting on it no more. Before they commented before, but they keep saying in the news that they're going to defend their currency. So it's basically like we have currency pegs, but nobody knows but the bank. But if you pay attention, you'll see, like right now, I wouldn't even dare try to buy above 150. And they scared people into that the first time they did it. Where was it? I'm trying to figure, where was the first one? Oh, this was the first one. So they hit 145. This move right here, they spent around $20 billion to create. So people, if you notice, it hits. Nobody wanted to buy really. And then they broke this psychological level right here. So at this point, people felt comfortable to buy, and it goes on a rally. It got up to above 150, and they said, "Oh, hell no." It's just so funny to watch, but it's not funny because I can't trade anymore. So like I had to I have a red flag. That red flag reminds me, don't trade it. I'm trying to find something else. Like I try to do two correlations. And I looked at silver this morning, but then I realized the spread was too bad for me. I was like, all right, forget that. And so I've already traded the indices. I'm gonna keep those. Gold actually was good to me today, but that's the only trades I took today, guys. So we're trying to wait for the chart to show up. But basically, I was expecting this demand to hold. Excuse me, guys. I was expecting this demand to hold. So and my bias was that we were going to take in buys. And the reason why is if you go into the 1 hour inside of our demand, and in order for me to take some sales, I'd have to see this low be broken. So it's not. It made a strong move upward. What day was this? Last week on Friday. And so I expected it to kind of pull back some. So from an N15 standpoint, I had it pulled to this demand zone that I saw right here. I took my first trade. Oh, this wasn't the full zone. I took this, but there was another. Oh, there it was. Here was the other zone that I also had pulled to. My first trade for the day came from that first demand zone that it ultimately ended up failing. Where's the rest? Oh, there you go. So where's the rest of the chart? Jeez Louise. Taking forever for it to load. Okay. So this was my first trade for the day. This bad boy went up 3.5. But Perry, just like I mentioned, where were my first zones, right? So from an N15 standpoint, right here was the area I really treat like all this as one supply, because all this was a supply zone right here. We get into the supply and notice how it reacted. It failed to take out. So my first place that it has to take out, I'll go back to my dual chart. That'll make it easier. Okay. There we go. To this one, there we go. Let's go. Okay. Go. First thing I wanted to see is it take out this intermediate 15S high. It did. So it broke. Okay, great. I feel better, right? So this was the first place that I was looking for it to go, was take out this first high. Then I wanted to take out the structural high. Then I wanted to look at what it did when it got to the supply zone. So we had strong movement. It wicks here, not as good. And I was watching this return thinking, okay, it's not going to be that strong. It gets into the supply zone. And so then this is where I start to see the things that make me want to turn around. I closed right around somewhere about right here, only because I saw this push come in, move some sideways, it pushes in, and then it begins to pull back, and I'm not seeing anything that's confident, and knowing that we're also at this supplies, we're also at this M15 supply. So I just went ahead and closed it anyways, simply because it like this move really wasn't a strong move. It constantly was pulling back the entire way. So supply zone made for a great target. Then I had one other trade somewhere over here. I can't remember where it was. Oh yeah, here it was. I took this one here. It went up. This was the second trade I took. This one failed to take out this high right here. So it went ahead and broke me even. After that, I decided I'm waiting until we get further deeper into our I wanted to see some type of movement going past, because I need to see it cross over this point right here. I needed to see it pass here, because once this push failed to take out this high, then I know we're going against it, which is exactly what happened. So it came back, pushed me down. Then I'll look to see this kind of jump upward. Didn't really have a demand zone, a new demand zone created off of this, but it was enough for me to consider when price came back into this region. So I wanted to wait until we got closer to the New York session. So somewhere around there, I start looking at price. Now, this one, I took this move, but I took this move off, I believe, 1 minute. I can't remember if it's 1 minute or 30 seconds, one of the two. Yeah, it was 1 minute. Oh, no, it wasn't 30 seconds. Well, I remember this was it. This was a strong push. It ended up breaking this high right here. Strong push upward. This let me know that this was more likely a good spot for me to take a trade. Cover this low or this. My first place I was looking at was take out this high. Took it out with momentum. I closed out my trade at somewhere close to about 10R. Yeah. We go back to M15. Same thing, we'll talk about like management, right? The first place I wanted to take out was I needed to take out this high. It did. The next place I looked for to take out would be this high. It did. And then the next place overall would be somewhere probably figuring that it would close. If you go back to this last candle, this was a supply. And if you look, that's exactly where it reacted. So I was able to get 10R out of it, or about maybe 9.7 when you could count like slippage. But that was ultimately where I kept saying, if it ever slowed down and be in this region, you go look at it on the 1 minute. And on the 1 minute, this was the last high that it was able to make. So it went from here to here to here to wick, 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 close. Make sense?
That was in the switch.
Oh, say it again, guys. Sorry, my thing cut out.
Go ahead, Perry.
Oh no, I just said it makes perfect sense.
Yeah, no, that was a lovely push up. The amount of momentum you had with that was just totally on your side. Not
Yeah.
a single push.
Yeah, no, I've been really I revised some rules as of recent to help me see stronger pushes. And man, the chalks and breaks and structures I get in now, I've been able to cut a lot of my losses and even a lot of my break evens, just because being able to really kind of read the right pushes with the wrong pushes. Because not every chalk, not every break of structure is valid. We only want the ones that are really the strongest ones. And
Hey, Brian. So I know you care about the structure highs and structure lows, but do you also care about the 5Rs, like your specific risk to reward, or you just care about the structure high? Which one is more important?
I'd say structure. Structure's going to tell you, like, I don't want to get into hopeful thinking when it comes to trading. So,
exactly.
you know, like I look at 5R, right? 5R is also like the first target, but I'm also looking to the left and saying, does 5R even make sense? Because like this trade, 5R didn't make sense. If I would have been targeting 5R, I'd be breaking even. But everything you're going to need to see on the chart, to me, is always in whatever structure or supply and demand, and even liquidity, as Nathan pointed out with his trade. Like, it's all going to be right there on the chart. But like my first my first goal is I hope for it to hit 5R, but if it's nothing structurally that's going to tell me it's going to, then like in the case of this trade, I'm going to close.
Exactly.
Because I want to take whatever profits are there based upon the setup that it shows me. But like Nathan mentioned earlier, like if you can't lose taking profits, yeah, that's a lie. You can definitely lose taking profits. You can take too small profits, but you can also, like Nathan had put out last week when he said, "Oh, I'm gonna hold a little bit longer past his rules," then you end up getting away from the plan. When you get away from the plan, that's when the results start to vary. That's when you end up taking unnecessary losses. Like I kept noticing, kept going through back testing, look at my break evens. I was like, there's got to be a way to take these break evens and turn them into profitable trades, because if it goes up 2 or 3R, I'll take 2 or 3R, and then I can afford myself 2 or 3 losses. And then, I usually catch a trade that may go a little bit longer. And at least for the losses I take, now I've really lost nothing on the day. Whereas I have a trade that goes up. The worst thing to me would be a trade that goes up 5, 10R, and I wanted to hold it for 15, and then I get nothing.
Welcome to my life.
Like that hurts. It really does hurt.
Yeah.
So you decide to yourself, what can I do? What kind of rules can I put in place that can help me manage it? Because my emotions tell me one thing, and a lot of times they're wrong. Like your emotions, some people talk about the gut feeling of trading. I don't have no gut feeling. I have a plan. It's going to follow the plan because my gut will give me 1,000 signals in a moment and butterflies.
Right. Yeah, that's dope. I got it.
So like this 5R, if I would take my profit at 5R, yeah, that makes sense, because it would have had to take out this high, or it would have rejected this high. If I wanted to take this 10R trade, it has to make sense. Well, yeah, it makes sense because there was a supply that it has to take out, and you know what? It stopped. So taking profit here was the ideal thing. And if anything, it showed me, look at how it moved sideways. Look at how it rejected with that long wick. Continue to move sideways. And then what did it do? Sideways drop. So that's why we say, like, everything, structure to me is the most important thing. It's going to tell you, like, structure for me is the most important thing. It's going to tell you stuff. It's going to tell you where to take profits. It's going to tell you where to hold trades, etc. So. Oh, Nathan, I'm like you. I got my alternate tabs here that I'm trying to figure out another pair. I even have a whole other thing of just different things I'm testing to figure out what's going to be a non-USD pair that I can choose that's going to help. So I think I'm going to go through some of these today, and I might add some stuff that I trade tomorrow.
Yeah, let me know if you come up with anything. Something with volume anyway, trades at our New York session.
Yeah, definitely. I know I used to trade exotics and USD Mexican peso. When it takes off, it does not come back. And that thing will run 20, 30R, and it can run for days. I'm really considering going back. The only thing it sucks is it has high spread. But if you get over that, it's going to trend for a long time. And it just takes off during the New York session. So considering Euro AD, Luca had a good trade on Euro CAD. He was telling me, man, you should consider it because it really has a lot of movement. I was like, oh, okay. And since it has CAD, it moves during the New York session, because New York, is USD and CAD are mostly the ones that move during those periods. And then you got the London session. It has Euro GBP, and what's the other one I'm missing? Oh, that's it. Yeah, Euro GBP.
What news feed do you look for? What news feed do you look at for USD peso?
Mostly just USD.
No secret cartel groups or anything on Telegram, no.
I wish there was some about the moving something, moving weight, right?
Us people here in Europe, we've never heard of pesos before. I'm after Googling it. I'm like, oh yeah, it's Mexican. That's a Mexican currency.
Depending on where you are in the world, peso has a different meaning.
Exactly.
Oh yeah, you could have caught this bad boy. See, it came to the supply zone and then it just takes off. It makes a new supply zone and then it drops. I'm like, ugh.
chaining.
Come to this supply zone. That's Friday. But yeah. Yeah, guys. Find the pairs that move. Moral of the story.
Exactly. All right.
Oh damn, I could have caught this today. That would have been a good one. Ooh. Now y'all got me curious. I'm about to start looking. Really try to find the pairs. We try to find another pair, even though this one is USD. That's the one bad part. But find the pairs that move. Read the candlestick body language or structure. It'll tell you everything you need to know. That was a high jump up. Oh, what other questions y'all have? Any other questions, Perry? Anything else we can help you with?
We're good. I'm good.
What? Oh, I can think of this one. Yep. Bam, thank you, man. So 500, another 500. What could have been bad? And then it pops right back in. Sorry, guys. Now you got me curious of looking at the Mexican peso. I would have taken this one right here. 500. 500. Not bad. All right, guys. I will let y'all go. Recording will be up on with Rob posted on to Teachables. If y'all got any questions, feel free to ask inside the Discord chat. And we'll see you again on Thursday, guys. Wish y'all a great week of trading and trade safely and make lots of profits.
Yeah. See
Good luck. See ya, guys.